Looking at the local unit, it's sitting around about the 740 mark, just below there. All eyes on the direction of the euro still.
I think so, Alishia. We've had the interest rate cut last week that caught some players by surprise. But I think overshadowed by the developments out of Europe and the fact that Greece has got a bailout package, and it's really now that stabilised the euro. And entrants looking for new plays and really the rand benefiting from the stronger euro.
Well, of course, one of the key issues is whether or not that promise of the Greek bailout given last week will be enough to turn around the euro trend. What's your perspective on some of the developments we're seeing unfold there?
I think, Alishia, the sentiment towards Europe is very bad, and I suppose correctly so. Fiscal issues are going to become, a focus issue going forward, not only for Europe but around the world. I think the fact that Greece has had promises of a possible bailout package has been taken relatively well, and as I say, that stabilised the euro, hasn't done too much on the top side, but certainly taken some of the short positions off the table. I think potentially a bigger story, Alishia, for the currency markets is what's happening in Japan at the moment. They're really struggling with deflation. They've got their own, bigger fiscal issues perhaps than Europe. And I think that's the next currency to watch because it has important implications for the rand as far as the carry is concerned.
Looking at that carry trade, I mean, of course, last week, as you mentioned earlier, we saw that surprise cut in interest rates. I mean, what's our position in that regard right now? Because many saying that, 50 basis points, hardly anything to affect our current position, given the global standing when it comes to interest rates at the moment.
Well, of course, 50 points is not a huge, deterrent at this point. In fact, but the government did allude to the fact that the strong rand was a big factor in them reducing rates, and I think that sort of highlighted the Reserve Bank stance as far as the strong rand is concerned. The local authorities really powerless at this point to do anything about it. I mean, they can suck up liquidity when the opportunity arises, but given the low interest rate regime across the world, 50 basis points is not going to make a long-term impact, particularly when the interest rates around the globe are at 0% and our equity market is looking particularly attractive at this point.
On the local front, of course, we've got a slew of economic data to contend with. It kicks off tomorrow when we look at those credit numbers coming through. What are your expectations there, where we have seen in the past a steady decline when it comes to the kind of credit appetite we've had in the country?
Yeah, I think if one looks at some of the retail data coming through, new car sales, that kind of thing, it is showing an economy that's coming out of a slump. And I wouldn't be too surprised, if the credit data showed a marginal uptick. But nothing too dramatic, nothing to upset the interest rate scenario, interest rate picture, and I don't think anything that's going to be currency moving at this point in time.
Then there's the trade figures on Wednesday and PMI figures on Thursday as well. Are you foreseeing any impact from that data coming to the fore?
I think trade data, Alishia, is important from the point of view of what the current account is doing, and that's been improving relatively quickly over the last few months. If that shows a further improvement, then I expect some further strength into the rand. PMI data, of course, is just another factor showing whether the economy continues its recovery path. Not a huge number as far as currency markets are concerned. The trade data is the one to watch, but of course that's notoriously fickle, but it is an indicator of what's happening on the current account.
I was saying earlier on in the show, before we headed into break, that some have said that there are signs of the money market starting to toy with the idea of yet another interest rate cut moving forward, while bond yields have pushed to almost, 1-year lows. Are you seeing a further slashing after last week's, for the most part, surprise cut?
Well, I think it depends what happens to the rand. Of course, if it gets further traction from here and moves towards that 70-20 level, I think that will give the Reserve Bank reason to worry. But then they will take into account that the last cut didn't do anything to weaken the rand. So I guess it's got to do with more than the economy rather than what the currency is going to do. And if we do see a further reduction in the inflation rate, if we do see sluggish growth coming through, perhaps. But my gut feel tells me, Alishia, that Governor Marcus will hold off for a while to see the reaction to the last few cuts And then, so, at least for the next sort of 2 meetings, I do expect rates to remain on hold.
Looking at forecasts for the week ahead when it comes to the local unit, David, what's your trading range that's been pegged out for the week, considering that it is a short week this week?
I think on the support side, on the downside, 735 is a very, very important level. If we get through that, then we can have another look at 725 again, and perhaps 720. For now, the top side seems very well, intact. Resistance level at about 745, all the way up to 750, and I think that's going to be the tough side to crack. I do expect, given what's happening in the Japanese markets, given the fact that the yen is weakening and is going to gain more attention as a funding currency, I do expect over the next few sessions, perhaps not this week, but certainly in the next little while, the rand to have a look at the bottom side, get through 735 and move into the 720s.
Very quickly, David, before we go, any comment on the kind of activity we're seeing on the fixed income space, bond market specifically?
Well, we did see yields reduce in reaction to the interest rate cut last week, but we must also remember we've got a huge amount of supply, not only from the government side, but also from the private sector, and that's going to keep yields relatively high, but supported by institutional activity as they look also to buy bonds to match their liabilities.